The argument for me has always been that we will see the manipulation continue until effectively the West drained of metal. Not meaning there's no metal, but there's just no metal available in the West effectively. That will be the pinch point.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite excited today to be joined by someone we've had on the show a few times, although has probably been too long, but joined today by Paul of the Sirius report, one of the world's top geopolitical analysts, and certainly a lot of things going on, not just in the metals, but around the globe. Tensions, really since we last spoke, Paul, have escalated. A lot of the things that you've talked about for years are now manifesting in more full force. So great to have you on here again and catch up with you. And before we get started, just how's everything going with you today?
Well, firstly, Chris, pleasure. It's great we're catching up again. And yeah, we're very well. Obviously, that it's that interesting, but obviously we relocated to Europe, to the Netherlands, and very happy to have done so. So it's not really a big change in that sense, but it was time to leave the UK, and so we're very pleased. And how about yourself?
Doing well down here in Mexico and just watching the things that are going on by the day. Obviously, in the metals, which we'll touch on, prices are lower, although a lot of developments happening out there. We have countries like Russia and India setting up bullion exchanges, and certainly the inflation that we've expected for so long has finally arrived. And perhaps we could start there with your thoughts on the metals, which I know you discuss regularly in your podcast, but be curious how you're seeing all these developments that are going on and where we stand right now.
Well, I know it's a bit of a statement of the obvious, but anybody who has any real interest in the metals markets knows irrefutably of manipulation in the West. I mean, I think anybody denying that really is getting rather pointless now. And the argument for me has always been that we will see the manipulation continue until effectively the West drained of metal. Not meaning there's no metal, but there's just no metal available in the West effectively. That will be the pinch point. But there's always an argument where people will say, well, someone needs to take down the COMEX and the LBMA. My point's always been, no, that doesn't need to happen. There can also be viable alternatives to the COMEX and the LBMA, because the Western-centric view of the world is changing. There is the multipolar world, there's the global South, and they have their own ideas of things they want to implement. And we've talked about the future development. This is going back in the past of the utilization of sound money effectively. And it was interesting a few months back that China came out very quietly but made a statement that gold will figure very prominently in the future. And that's all they said. They didn't say an awful lot of what they meant by that, but I think it was fairly obvious. Now, that doesn't necessarily mean every currency is going to be backed by gold, but it could be a basket of commodities. So Russia could include, obviously, oil and gas, for example. But gold will be a significant component of that. And we've seen, certainly in the last year and beyond, there's been an enormous amount of gold buying by principally non-Western central banks, not entirely because Poland's obviously bought some in Hungary, etc. But we are increasingly seeing on a kind of monthly basis that, for example, recently we've seen announcements like Ghana's obviously is making steps towards securing gold reserves and in supporting its gold mining industry. So they're going to launch this domestic gold buying program in September. And it's interesting, of course, Ghana's Africa's major gold producer, and it's the world's sixth largest, at least officially, where last year in 2021 it produced over 115 tons of gold. We've seen the Central Bank of Qatar adding nearly 15 tons of gold to its reserves in July of this year. That's the largest monthly increase based on official records, which go back to the 60s. and its gold reserves are now over 72 tons. But when you look at the figure, you're talking, they obviously prior to this announcement had around 58. It's roughly a quarter, so they increased their gold holdings by 25%. So these central banks around the world, and what you might loosely call the global south, are not doing it just for the sake of buying it, because they're doing it because they're anticipating there's going to be a very different look to global finances, how currencies should be backed by sound money, how we have to begin to think about living in a world where nations live within their means. This is very alien to the West, who seems hell-bent still on, of course, just printing money into oblivion, and everything revolves around a debt-based system. But he also made the point, of course, India's launched an international gold exchange. Saudi Arabia is establishing gold refineries. There's a newly established commodities exchange in Nigeria that's trading gold. And you make the point before we came on to start the recording that Russia's now obviously proposing to launch its own international standard for precious metals. This largely came out the back end of being effectively excluded from the LBMA. So they have something called the Moscow World Standard, and they want to normalize the functioning of the precious metals industry. Now, of course, on that basis, they can launch their own price fixing, along with other large banks. The proposal initially is with the Eurasian Economic Union, which includes, of course, Russia, Kazakhstan, Belarus, Kyrgyzstan, and Armenia. They also think they can attract other big gold players like China, India, Venezuela, Peru, maybe other South American countries. So on that basis, they can be in a position where they start to say, look, we have an alternative, and the precious metals will be fixed either in national currencies of these key member states, maybe a multilateral currency, which could involve the BRICS. And when you start to look at the percentage of all those nations that would be part of this, they're producing like 60% of the world's gold, maybe even higher. And of course, this would be in non-dollar terms. And the idea, of course, is that you would have true price discovery. The knock-on effect of this would be, and okay, these things don't get rolled out in 5 minutes, but the point is that by doing so, you're then also likely to create an arbitrage with the West, which is like to further drain the West of metal. And just as a side note, it's worth noting in the silver markets, because I know silver's a big thing for me as well as you, Chris. And it's slated that India will import over 8,000 tons in 2022. And I made the point on Twitter, if they do this, this could cause a serious short squeeze in silver. And I know people say, well, I've heard this 1,000 times, but I've always made the point, I've never said the price will increase for years, because I don't see the evidence. Although I think we're starting to see some evidence of this potentially happening sooner rather than later. But if a nation like India suddenly wants over 8,000 tons of silver, they're going to have to acquire it from somewhere. And therefore, that could put some serious strain on the paper markets in the West. I mean, we're not saying definitively it will, but there is certainly evidence from last year and in 2020 that China was buying up enormous amounts of silver very quietly. In fact, they were hoovering up every commodity they could get their hands on, while the rest of the world was preoccupied with what was going on with the pandemic. I'm not suggesting China wasn't, because they've got the zero COVID policy, but in the meantime, they're also making some pretty serious strategic moves to buy not just silver. They're also buying up as much gold as they could possibly do so, and they're continuing to do that to this day, because we've seen in the July stats that they imported 80 tons of gold from Switzerland. So, and also China's net gold imports via Hong Kong recently jumped 5-fold as well. So there's very clear evidence that nations across the global south particularly are buying as much precious metals, in not just gold, but also silver. And it's very clear why they're doing this. And if they provide an alternative to the Western sort of paper system, this could also be extremely appealing to miners, because miners could then say, well, we don't want to trade with the West anymore. We're not going to sell our metal. We can sell it to the East or to the global South, because in terms of true price discovery, they're going to give us a far better price for an ounce of gold equivalent or an ounce of silver. And that therefore places additional strain on the Western paper market. So another point worth making, I often get people saying, well, if there's all this shortage in the West, why is the price being smashed? Well, that's precisely why the price has been smashed, because there is shortage. And we've certainly seen evidence in recent months of silver and gold being in backwardation, which implies shortages. Right. But of course, there's always the point we have to differentiate that the paper market bears no resemblance to the physical market. And a lot of the reason why they want to smash gold and silver, and of course, you smash gold, the silver price moves, of course, in exactly the same way by extension. But it more revolves around the fact that if the price of gold, and people can argue what they think it should be, but let's just pluck a figure for argument's sake. If gold was $2,500 an ounce now, you would see the biggest move out of paper into gold, because there's, of course, this irony that whilst retail investors will say, well, gold at this price is worth buying because they think it's undervalued, in terms of institutional interest, they tend to see it the reverse, that when the price is high, well, I need to get it now, because if gold's at $2,500 an ounce equivalent, then there's a serious problem with the dollar. We need to get out the dollar, get out of paper or paper denominated assets, and we need to move into gold. So that's why there's a big move to suppress the price of gold, because it would be very indicative of the fact that there were serious strains in the paper markets. And we know for a fact that paper's under serious strain. I mean, it's a statement of the obvious given trillions of dollars that have been printed just in the last 2 years. I think there was something like, $6 trillion and 3 trillion euros. I mean, it's self-explanatory that you're devaluing, debasing a currency on that basis. Now, okay, there's a big argument. Again, why is gold and silver not moving because of all the inflationary pressure? Well, it's not necessarily straightforward that will happen. And again, it comes back to the point is what ultimately causes a major shift of institutional interest is when they begin to have a lack of confidence in the dollar. Now, at the moment, they don't have that lack of confidence. They don't see a huge problem because they're looking at markets going, well, everything seems okay. Okay, we've got a bit of inflation, but so what? I mean, this is a transitory problem, as it's been stated for the last 18 months or maybe even longer, which, of course, is not a transitory problem, but it's all just perception. But it wouldn't take much to shift that perception from being, well, it's not really a problem, to it suddenly being a problem. And as I said, if you had a sharp move in the price of gold, that would be a major trigger. And again, it comes back to the fact we know the paper market doesn't bear any resemblance to physical demand and supply. And therefore, there is a vested interest to try and suppress the price as well, because the risk is if like I said, it went to $2,500 an ounce, you'd have enormous demand in the West, which could cause suddenly there to be no real physical gold and silver in the West, and that therefore places an enormous stress on the paper market.
Yeah, and we've seen that to a degree, especially on the silver side, where there's metal been coming out of London and also out of the COMEX. Not necessarily, I wouldn't call it a run on either of those yet. There's still metal in there and above historical standards, but like you mentioned, India taking in a lot of silver and China as well. And do you think this just keeps getting pushed until it reaches some sort of break like that?
Yeah, I mean, I think there's an inevitability. I mean, as I said, I've spent 9 years saying to people, the price will only shift when we get to the point that effectively there isn't any physical metal or enough physical metal that means you can manage the paper market the way it is. It becomes unsustainable. Now, there's always the question, when's it going to happen? I've never said it'll happen next week. I've always said there'll come a point when it will happen. Now, a perfectly reasonable argument would be, are we at that point when it's going to happen? Well, all I would say is, and I'm not sort of copying out of giving an answer because I've always been very clear on this. We are at a point where there's certainly going to be additional strain. It's not breaking completely, of course it's not, but what is very clear is there is definitely a concerted effort to suppress the paper price effectively of gold and silver. I mean, and it's been very acute in recent months. So if this continues, then that would give me reason to believe that, of course, there is significant strain. Obviously, I'm always a bit mindful of how much can we actually really read into COMEX data, for example, and really understand what's going on, even though notionally you're absolutely right. There seems to have been, it's not broken, but there seems to be a drain going on. I mean, and maybe, in the reality of that, we'll get to the point where, it's like the straw that breaks the camel's back, and we could be in that position. But I wouldn't be jumping around going, well, I'm seeing silver going to $50 an ounce in the next 3 months. I don't work on that basis. We just work on the fact that this is event driven, it's not time driven. But there's certainly an indication. And I think this also comes back to the point. We know silver is to a large extent an industrial metal. Now, and of course, silver is a huge component in many factors of industry. So, okay, solar panels is one example, but it's in mobile phones, it's in all sorts of technology. Now, the question is, given the inflationary pressures we're seeing, given the fact that, of course, there's going to come a point if energy prices keep spiking the way they are, that's going to put a serious, or put it at serious risk that mining operations might have to be mothballed, because if the notional paper price of silver is what it currently is, which is about $90 an ounce, if you can only produce silver because of escalating energy costs, and energy is an enormous component of producing an ounce of silver, of course, it's a statement to the obvious, then it could put a squeeze that means, well, hang on, we're all of a sudden, we're not going to be able to produce, or, miners can't produce silver. The other thing is that this could seriously affect refiners if it carries on, and therefore they don't refine the metal, and therefore it starts to put an enormous squeeze on the availability of physical metal. Also, you might get nations going, well, it's dirt cheap, and I think this is why India's doing it. They're saying, let's buy every ounce of silver we can get our hands on. Yes, some of it's for the retail market, but some of it will be for an industrial application because it's dirt cheap. I mean, will start to go, hang on, this is not sustainable either. Now, again, when that happens, we don't know. I'm not here to make predictions of this week, next month, or whenever, because that's not the purpose of why I do things. It's just to get an understanding of, okay, what's the metrics? What do we understand? What are we seeing? And certainly the spiking energy cost is something we need to factor into our thinking, because it will have a negative impact on miners, on refiners, the whole process. And therefore there comes a point where miners are going to say, well, we can't function at this price. If this continues, we're not going to take a loss every time we're trying to mine an ounce of silver effectively. So therefore we're just going to mothball operations. Now, okay, there's not a lot of just pure silver mining. Of course, a lot of it's obviously constituent of other metals, so we have to also factor that into our thinking. So it's not just straightforward, but there is a lot of pinch points that are all converging and have been for a while. And could it be a pinch point that is the straw that breaks the camel's back? Well, yes, possibly, but again, we can't say at this point in time. But as we sort of project into the future, there's no clear indication at this point that all the problems we're seeing with the energy markets is going to disappear anytime soon. In fact, it's likely to get worse before it gets better, and how long it gets worse for is difficult to quantify. There's even governments kind of half admitting in the West, well, originally, it'll just be a short-term problem. Now they're sort of going, well, it could be to the end of 2023. No one really knows. But that degree of uncertainty is going to affect mining operations and refiners, and therefore, the paper markets must be looking rather nervously going, well, these are factors that could affect us also. But what do they do? Let silver go? What's the implications of the price of silver? For argument's sake, going to $30 an ounce now. I'm not saying it will, but we're just using that to illustrate the point. I think that's something that must be focused in their minds, because that could have serious ramifications. Because I think there's no doubt when silver last hit 30 or so during the pandemic, suddenly there was a big fear. We can't allow this to continue. So but there comes a point where there's all these extraneous factors, as we just highlighted, that are going to influence physical supply. And ultimately, you can manipulate paper as much as you want, but if the underlying asset, you create a shortage and then it puts an enormous squeeze, it's not sustainable to try and carry on suppressing the price, because again, it's a statement of the obvious: the price is suppressed. I'm not saying that means silver should be any figure, but we know it's been suppressed, and we keep seeing all the evidence to support it with regards to court cases happening where there's an admission of price manipulation, and I think that's just the tip of the iceberg. And we've seen it enough where there's just a smash, and the number of paper contracts dumped is ludicrous. Sometimes you're talking like 6 months annual global production of silver in 2 minutes. It's just not reality, as we know.
Yeah, and certainly you mentioned a lot of good points in there, especially with the miners, especially with the price down and then the higher energy and other input costs, not really encouraging a lot of future projects to go online. Meanwhile, in the Inflation Reduction Act, there's more green spending there. So doesn't seem like an ideal situation going forward. And then you mix in the Fed rate cuts, which I suppose on one hand, if you're withdrawing a little bit of the money supply, you could see silver going down. Yet you touched on how there's a difference in the view of the Fed's handle of the situation. Perhaps you could talk about that a little more, because I imagine that in the East, there's a different perception of how this plays out, where at least here in the US and in the West, I think the view is that, all right, the Fed's going to raise interest rates, they'll slow down inflation and everything will be fine. Although I don't think that's shared in the East. And perhaps you could talk about that a little bit.
Yeah, I mean, look, we always come back to the point with the Fed. I mean, there's this argument about they're going to put the brakes on and stop raising interest rates because obviously it's going to seriously affect equity markets. And whether people agree or disagree, the West purely functions on the basis of what market. That's the Western economy. It's what the markets are saying and doing. So, and the problem with raising interest rates are, well, obviously everything's so highly indebted. So if you want to refinance, you're going to have to refinance at higher interest rates. If you want to raise additional finance, you're going to have to pay higher interest rates. If you've got secured loans, then okay, you're fixed at whatever price you took the loan at. But if you've got variable loans or credit cards, you're going to pay extra interest. So this is not sustainable. But the argument is what amount of pressure is the Fed under to continue raising interest rates? But the question is raising interest rates going to deal with inflation? Well, the problem is there's a kind of myth that the US economy is doing fine. It's in good shape. Look at low unemployment. Look at all these ludicrous metrics. But we know, even though there's trying to be an argument about what constitutes a recession, but from a technical perspective, the US is in recession. And of course, GDP figures are a complete work of fiction anyway, because they bear no resemblance to reality. And a simple point to illustrate this is if you look at, say, an iPhone, the US books the entire cost from raw material through to selling it in a store in the US of an iPhone, when the US contribution to that is pretty small, but they book the whole cost. So, and that's just one small example of why GDP is meaningless. So notwithstanding the fact the US is in recession, and the argument is, well, we're raising interest rates to cool the economy. No, you're not going to cool an economy that's in recession anyway. We're seeing far more indicative of stagflation rather than just regular inflation. And the question is, how's raising interest rates going to cure the problems of inflation? Well, is not going to stop money printing. In fact, it's more likely to increase money printing because of the fact simply that everyone's going to become more and more indebted. So they're going to need more and more finance. The other point with regards to raising interest rates is, and I can always come back to this point, the other thing is you can't print food, you can't print energy. If you've got fundamental problems, structural problems with energy, and energy is the lifeblood of a nation, you're not going to be in a position to cure inflation if your energy keeps spiking, because everything depends on energy. If you want to produce something, you need energy. If you want to live, you have to have energy. So if the cost of energy is rising, the cost of everything's rising. So you're not going to curb inflation on that basis. This isn't like the 1970s going, well, we've got an overheating economy. If we just keep raising interest rates, we'll cure inflation. It's far more complicated because of the fact of everything that's principally happened since 2008. So the idea of raising interest rates will cure inflation. And if inflation officially is running about 9%, but in reality it's probably 19%, then what do you think raising interest rates at 5 or 6, 7% is going to combat inflation for the reasons we said? Well, no, but the thing it will do will just blow everything up. And it will blow up the derivatives market. It's likely to blow up the Western financial system simply on the basis of that it will be completely unsustainable for interest rate swaps to be able to function 4, 5, 6, 7% interest rates. So there's a lot of argument, really. Oh, the Fed will have to quit. They'll have to reverse. They'll have to go back to QE. They're going to have to lower interest rates. This is not sustainable. And we can look at the two scenarios. They can keep raising interest rates, but ultimately, all they'll do is just blow everything up, because it's completely unsustainable to have had QE zero interest rate policy for effectively 14 years. And then suddenly go, well, actually, we're not doing that anymore. We're just going to raise interest rates when the whole Western economy's financial system's predicated on endless credit. That's the only thing that keeps everything going, just endless credit and cheap energy. Of course, you've not got cheap energy and you've not got cheap credit. So it's not sustainable to do that. So the flip side is, okay, forget the credibility issue, but they can start going back to QE. They can stop quantitative tightening, even though it's arguably a question, have they really ever started? But let's say they do, and they start lowering interest rates. Well, they're not going to cure inflation. And in fact, there may be an argument that inflation gets even worse as a result of it, because they're just going to print more and more money. And as inflation crept out of Wall Street and the banks, where it was kind of just in this little bubble, big bubble in equities, bonds, etc., they moved it in the pandemic into the real world. Well, if everyone's suffering because of cost of living crisis, because of inflation, because of spiking energy costs, everything costs more, they can't live, then what are they going to do? They're going to just go, well, everyone can starve, everyone can freeze to death. Or are they going to go, we can't allow that to happen, so we're just going to have to print huge amounts of money and bail everything out to stop people effectively starving or being freezing cold in the winter? That sounds extreme, but that's where we're heading. So if they do that, that's just pumping more and more printed money into the real world, into Main Street, which is going to cause more inflation. So you can either try and curb inflation, which it won't do, and blow everything up, but ultimately the destination's the same. If you lower interest rates and just pump QE to infinity, you're just going to blow everything up. Just a slightly different way of blowing everything up. So there's no solution anymore to what they're doing, because once their bubble, or containing the inflation inside the bubble in the financial system, effectively, once it leaked into Main Street, they can't control inflation in the real world. It's impossible, because again, you can't print energy, you can't print commodities, you can't print food, you can't print the things we all need. So they've lost total control over that, and there's nothing they can do to, you can raise interest rates, lower interest rates, do whatever you like. They're not going to curb inflation, because It's structural problems that are causing it. They're not going to disappear on the basis of any Fed policy. So for me, draw it academic, whether they raise interest rates or lower interest rates or whatever they do, ultimately, they're just going to accelerate blowing everything up because everything's completely unsustainable. And therefore, on that basis, it really doesn't matter. I mean, okay, if you want to trade it somehow, well, good luck trying to do that. But for me, we've got to the point, it doesn't matter what they do, because the end result will be the same. Okay, it might be a slightly different path to get there, but at the end of the day, does it really matter when everything's blown up how we end up blowing everything up? But they haven't got a resolution to the problem. And of course, there's an element of geopolitics in this, and this isn't about justifying a war in Ukraine in any way, shape, or form, but the West has to face reality that it needs Russian energy. Whether people agree or disagree doesn't matter. This is reality, and it could have had Russian energy, and it did have. Okay, it made policy decision to try and destroy Russia's economy, its financial system, and get rid of Putin, and it failed. And it was always going to fail. But now, because of the amount of political capital they've invested, they can't turn around after everything that's happened and say to Russia, oh, okay, we profusely disagree with the war, that's fine, but we need your energy. And we need Nord Stream 1 and 2 back on, or Nord Stream 2 online and Nord Stream 1 fully back operational. And we need to find some other solutions. And they're not going to do that, but in not doing it, they're just accelerating the enormous problems that spiking energy costs are creating in terms of creating inflationary problems, because we're back to this point. If you have spiking energy costs, if you manufacture something, it costs a lot more to manufacture. And look at producer price inflation in Germany. Year on year for July, it was up over 37%. Well, if your producer price inflation is costing 37%, what does that mean in, okay, for what it's worth, CPI? I don't place a lot of value in that figure, but that causes enormous problems. So, and energy costs are causing businesses like in Germany to have to mothball operations or just simply shut up down operations, and companies go bust. So it's going to have enormous knock-on effect of ripping the heart out of what you could term the industrial heartland of Europe, which notionally speaking is Germany. And because of political capital being what it is, they can't turn around and go, well, we've made all this big play about, sanctioning Russia and because of the Ukraine war, but now they think, well, if we turn around and say to the people, well, this isn't sustainable, we're going to have to get Russian energy, then, well, that's political suicide. But what's the alternative? Wrecking economies, destroying financial systems, destroying energy markets, creating energy shortages, creating food shortages, which is going to impact, the whole of the Eurozone and beyond in the West. They're not actually thinking, what's the ramifications of that? How are we going to justify that to the people of Europe? Are we going to say, well, this is to defend our freedoms of democracy because of what Russia's doing in Ukraine? People are going to go, I don't care about that. I'm in serious trouble. I can't pay my energy bills anymore, or I can't feed my family, or I'm having to choose between feeding my children, which I will do, and not feeding myself. And we're seeing indications of that already across Europe. And this is only going to get worse as we can project things currently. So they're caught between a rock and a hard place. And because of how the political system works in the West, they cannot admit they've completely screwed up. Yes, they're perfectly within their rights to say we find the war appalling with Russia and Ukraine. That's fine, but what is it doing to us economically, financially? I mean, is that not important? And saying to Western people, well, you have to take some pain because we have to contain Russia. Well, that's all well and good, but if it's not containing Russia, but it's actually accelerating the demise of the West in the process, they can only get away with it so long before Western people will turn around and say, enough's enough. And there's certainly indications in the West of fear of this and trying to come out with statements like, well, what was it? Macron came out and said the era of abundance is over at the moment, but we have to do this to protect, freedoms and democracy. Well, that's just a justification to say we screwed up with sanctions to do with the war in Ukraine. And but look, we're doing this because of Russia. So, they think we'll forgive them for making these policy decisions because it's all about trying to contain Russia. Well, it's not containing Russia. I mean, Russia's balance of payment surplus is bigger than it's ever been. Russia's economy is doing fine. Go to Russia, look at their shelves. They're full of food. They haven't got shortages, and they can produce energy at very cheap prices domestically. So their economy isn't going to suffer from inflation the way we are because they can produce things at very cheap prices. And if they want to export energy to what they call friendly countries, they can do so very cheaply. And here's the kind of quid pro quo. They can go, well, here's a bunch of cheap energy. We want some goods from you. Oh, by the way, it's very cheap, so you can manufacture the goods far cheaper. So it's a win-win. We get the goods that we want at a much cheaper price. You get cheaper energy. It's everyone wins. And the West sat there going, but we're losing because we are paying the price for policy decisions to do with sanctions that is completely blown up in the West. And no one can deny the reality of that. But that's the position the West finds itself in because they thought in their stupidity that when the war started, we just need to sanction Russia into oblivion. And in a matter of weeks, it'll be over. Russia will capitulate. They'll leave Ukraine. Putin will be gone. All the problems resolved. Then we will have a nice Western sympathetic president in Russia who'll give us all the energy we want and not be, someone who's challenging the unipolar world and US hegemony by the advent of multipolarity or the ongoing, sort of development of it. And they completely miscalculate it. But of course, they can't now go, we screwed up, we made a mistake. So they have to keep the war going, particularly from the US perspective. Because if Russia wins the war, then it's the end of NATO, it's the end of US hegemony, and it changes the entire landscape of the world. Because the United States is then going, the NATO countries are going, well, you couldn't defend Ukraine. Look at the huge financial problems we're in, economic, societally, all the problems we're going to experience. We've suffered enormously as a consequence of this, and Russia's the victor. I mean, this is just from a political standpoint, it would just be an absolute nightmare for the US. So the US wants the war to continue, but then the question is, does Europe get to the point where it turns around and says we cannot continue to support this war because it's destroying us and certainly privately, not just big business and commerce, etc. But there's a lot of politicians privately going, this is not sustainable. We cannot continue doing this. And was it the Belgian Prime Minister came out and basically said, well, we could have 5 to 10 years of really tough winters. Well, if you have one really tough winter, do they really think they're going to survive? That, oh, it'll just be a problem in the winter, or they get back into spring and summer. Miraculously, these problems will disappear. It won't. Once it happens once, then you're in serious trouble. But by admitting it's 5 to 10 years, what they're effectively telegraphing is we've got serious problems for the next decade. And that's in reality what the West's facing when it made policy decisions that were ultimately hugely detrimental because they believed they could crush Russia in the blink of an eye. And this would never happen. And the irony is, if Russia hadn't done, and whether people agree or disagree really doesn't matter, but if Russia hadn't gone into Ukraine and done what it's done, by now Putin would have no longer have been the Russian president. That's the feeling of Russian people, that from their perspective, and it's not about agreeing or disagreeing, we just have to accept that's the Russian perspective. They felt justified to do it. The Russian people support it, and that's why Putin's popularity is the highest it's ever been. This is a reality the West doesn't like to face, but that's just how it is. And by me saying it, I often get people going, well, you're just pro-Russia. No, I'm just telling people what the reality is. This isn't about supporting what Russia does or not supporting it. It's just stating facts. And the West has to deal with the facts and reality of what's unfolding rather than just constantly wanting to pretend that some alternative reality is playing out when in fact it's very clear that's not the case.
Well, thank you to Paul for everything he shared there. Certainly a complex situation that perhaps doesn't have any easy answers, although I think he sure laid things out in a pretty clear and easy to understand way. So appreciate that. We did break this one into two parts since our call went a little long, but part two will be coming your way tomorrow. And hopefully that's something you can look forward to. As amongst other things, I asked him how he sees this all playing out and ending, which I think you will find interesting. Before we wrap up, I'd like to thank Blackrock Silver for bringing us today's episode. Blackrock earlier this year released a 42.6 million ounce silver equivalent maiden resource. And in the time since then, they've done further exploration as they've stepped out 1 kilometer at Tonopah West and drilled 702 grams per ton silver equivalent over 0.7 meters within 4.6 meters, grading 211 gram per ton silver equivalent. You can find out more about that at blackrocksilver.com. No, it is not connected with BlackRock, the investment company, which is something people often ask. But to find out more, just click on the link in the description field below. With that said, I sure appreciate you being here, and we'll look forward to seeing you again tomorrow for part two with Leonard and Paul.